Hi guys, I'm Daniel LeBeau. Welcome back to the Fourth Revolution, where I discuss stocks for your portfolio of the future. So today I'm going to be talking about electric vehicles and the massive market push that we've seen in 2020. In the face of this economic recession and global pandemic, these EV stocks have done nothing but rise. So I'm going to take a look at some of the key equities to focus on, as well as some of the uncertainty involved in investing in this revolutionary space. So here I'm talking about the biggest EV tickers in the market today. We have Tesla here in the candlesticks, the China EV giant NIO in blue here, and then the controversial Nikola here in red, which or we've all seen, take a massive dip since its debuted shares in early June. We'll discuss more about what's happening with Nikola a little bit later here. I want to talk about primarily NIO and Tesla. So I never would have expected this kind of massive run up from either of these stocks in the face of an economic recession. This is a luxury brand. Why are people buying luxury brands in this economic recession? And the fact of the matter is that this recession is not impacting the wealthy the same as it's impacting the poor. And with mortality on the minds of many of these wealthy individuals, being pent up in your house all day gives you an urge, I suppose, to buy a Tesla vehicle. And Tesla is estimated to be delivering over 510,000 cars this year, which would be a 40% increase from last year. And their potential has only exploded with their Shanghai factory being a success. In the Berlin factory, production is going to start ostensibly next summer in July. So they are set to take over the EV world. And NIO is one of their big competitors in China. China controls about 50% of the EV market, and with their government subsidies, it's no question why they continue to push more and more growth in this space. And NIO is up almost 500% this year as they continue to outpace expectations. They delivered over 21,000 vehicles this year, which is an over 110% increase from last year. And they're only expected to continue to produce record sales for the next months of 2020 and the years to come. Nikola was all the rage earlier this year. There was so much hope in this EV hybrid that was going to be a huge manufacturer, ostensibly of trucks and semis. But you can see the stocks rise and fall here. This was, I think, a huge push from retail investors just hoping to get on the next Tesla, quote unquote. I mean, you could even see in the name the namesake was right off of Elon Musk's Tesla brainchild, but this company has only trended down from its IPO here. So it was announced merger was right in the beginning of May, and you can see a little bump here, and then its ticker changed here in early June, and it's just pushed this stock up to an unsustainable level, and then it adjusted back down here. And then right here was when Hindenburg Research came out with a report that Nikola was defrauding investors with false information and misleading them, and this company has just plummeted since then. Trevor Milton, its charismatic CEO, stepped down, which only strengthens Hindenburg Research's report on them misleading investors. So I really am apprehensive about putting any position on. We saw a bump from this 17 level here. It's trading at $23 today. I think that's a bit of a short squeeze, as this huge downward trajectory here was driven by primarily short sellers who saw an opportunity, and I don't blame them. This company, I think, is going down. They're losing their big partners, which included GM, BP, and all of the pieces of the puzzle that they needed for this company to really be successful are starting to fall apart. And I don't think this stock's going to go anywhere but down from here. So I would stay away from Nikola at its current price level. SPACs have been huge in 2020 thus far, and here's another example of a SPAC that's buying out a EV company. So that's how Nikola went public here is they were bought out by a SPAC, which is a special purpose acquisition company. They purchase a company to go public. So ostensibly, they IPO with nothing but a promise to purchase a company in the future, and then they purchase the company, change their ticker to that company's, preferred ticker, and they turn into that company. And that's what's happening here with Kensington Capital, which is going to be buying out QuantumScape, which is a next generation battery company for EVs. This company is focused on lithium metal, which is the next generation of batteries past lithium ion. And it's going to be huge in the future. But I would be apprehensive about touching any of these shares. We've seen some blow-ups from SPACs in the past. For example, Nikola was up to $90 and now it's down to $20 a share and only expected to go lower. We saw it with Virgin Galactic. SPACs have seen some huge upsides and huge downsides and overall massive volatility. So I would be apprehensive about this, but I think QuantumScape, which is going to be the ticker QS, is going to be a huge driver in the battery segment of EVs in the years to come. So there is a lot of hype in the EV market today, and you can see it with the massive run-ups we saw from Tesla and NIO, and even Nikola, which obviously had a preceding downfall. But there is a lot of optimism right now in the markets for EVs, and I would still be apprehensive about buying these companies, with Tesla trading at a 10 times forward price to sales, which is unheard of for an automotive company. But then again, these companies aren't automotive companies, are they? They're tech companies. In the shell of an automotive company. So I think these companies are going to face competition in the future, and it's only going to heighten. These are tech startups, right? These the Toyotas, the Volkswagens, and GM and Ford aren't going to let these young tech startups take over the automotive industry, which they have controlled for decades, if not centuries. In a matter of months, they're going to come out with their brand of EVs, and this. The saturation in this market is only going to grow going forward. So I would be apprehensive at the lofty levels that we've been seeing from NIO and Tesla, but they are definitely stocks to consider if we see a broader market pullback. So watch out for that, and thank you for watching The Fourth Revolution. See you guys next time.